Welcome back to the channel. A buddy of mine, a value pick bro, he was asking me about the makeup companies. He was asking about two, Estee Lauder and Elf. I'm going to cover Estee Lauder because I did see this on one of my value scans before. So um, I don't know makeup, but I do know something about stocks. Let's jump over to the chart first of all. So this is Estee Lauder, symbol EL. Let me blow up the scene, and there we go. Estee Lauder was 356 in its highs. Whoops. Let's remove that drawing. It used to be as high as 350. And then before that it was 50 bucks. So 50 bucks almost went to 400. And then the stock is down. The stock is down high to low over 80%. Now that means there was a slight bubble or a change in earnings. But when something is down 80%, that's when the value investors salivate. Now let's use the value pig indicator that we custom made for followers. Shout out if you're a follower. Don't forget to like and follow, subscribe. 1,000-day moving average, it means it's starting to be attractive if it has cash flows. Let's look at the indicators. We'll ignore RSI. Price to sales is below 2. That's attractive as long as they're making money on those sales. Price to cash flow 14. That's below 20. The stock market right now, as in the S&P 500, is around 20 to 25. So that means Estee Lauder is possibly cheaper than the S&P 500. Let's jump over to Seeking Alpha, and same thing. We've got an EPS of $1.38. That is earnings per share, and then PE of 50 looks high, but that may be. We'll have to look at the numbers to be sure about that. Oh, they have a dividend, so that's good. Dividend yield of 2%, so you still get a little bit of a profit share. That's what the dividend yield is good, especially since the stock has come down. It makes the dividend more attractive. Some bullish articles, that's good. Quick scan. They do skincare, makeup, fragrance, hair products. They're located in the US. All right, here we go. So they are expensive for 2025, but they have a high growth rate. Interesting. So this is a growth stock. Growing earnings means a growth stock. They have a lot of debt. They do have some debt. So it's $9 billion in debt. The total market cap, the value of all the company is $24 billion. We have to add back that debt minus the cash. So it's a little more expensive because of that. Let's just keep that in mind. Let's go to the earnings estimates from analysts. Earnings estimates. Okay, cool. So they are a growth company, but it slows down. At least that's what expectations are from analysts. So I already took all this data and I put it into AI to give me a valuation estimate. So what I did is I went to Grok and I asked it, I gave the data from Seeking Alpha and I said, make a table, include EPS, that's earnings per share, EPS times 25, and EPS times 40. So that gives me a average and a premium range for what the stock price should be worth. So in this year, 2025, maybe I'll zoom in a little bit. For 2025, if they earn $1.38, they could be worth between $34 and $55. So that makes sense because they have a high PE right now, but people are willing to pay up more because over the next few years, as they grow earnings, the company will be worth more. I extended this table. I asked it, hey, extend the table for 20 years based on the trend observed. And then it gave me all this number. So if you're a long-term investor and you hold this for 20 years, the year is 2025. What if the earnings grow and AI filled in these numbers? They're a lot slower in growth. So that's okay. Hopefully the company does better than that. But theoretically, this company could be worth 300 to 466 in the future. Let's see. We only have for sure analyst expectations up until 2034. So 2034 is around here, and the rest was filled in with AI. So by 2034, in a optimistic rosy market, it could be worth $300 in 2034. So what I like to do is I'll just copy this table, and I'll go over to my chart. I'll get rid of all my lines, and then I'll come over here and I'll paste it in. That is not a nice table. So maybe I'll have a turn the above table into text-based lines for the grid. There we go. That should be nicer. I'm gonna copy this once it's done generating. And that'll be a little easier to look at. So we copy that, and we'll get a text, we'll paste it, and there we go. So now, anytime I look at this chart, I can say, hey, at least today, with analyst information, we think that it'll be a $300 to $400 stock, but you're going to have to hold it for 20 years. So is this a good price? I can't really answer that for you. You have to decide for yourself. But this is what I do when I look at a stock. I've calculated the growth. I've calculated a future price. Is this an exciting stock for me? I think it's a good stock. I don't think it's the best stock because the growth rate, there's better opportunities. There's cheaper stocks. Like some of my other videos cover some examples, but someone who's interested, if I was interested in makeup for whatever reason, if I thought makeup would be a growth business, this would not be a bad place. I definitely think that I would make money buying this at this price. Could it go lower? It's possible because the S&P is kind of high. Could this, go lower to as low as $20? It's possible. So the good thing is that the upside is there over the long run. The risk is maybe 50% from here. But because I have a clear plan, I have a clear vision of what it could go to, I feel like it would be worth the risk, and maybe I could dollar cost average into it. Buy a little bit, take a look again. Maybe the S&P comes down, take a look again. Maybe there's inflation and makeup prices go up, take a look again. So this is how I would look at it. Buy a little, check again, and then see what happens. So I hope you found that helpful. I'm going to send this to my buddy, and we'll probably do another video on another stock. And if you have an idea, let me know in the comments below, and maybe we'll cover your stock. Cheers.